Hey Casey, I'm sorry. I don't know why it's not giving me the right date. Hello Arnon. Give me a sec, guys. I'm trying to post. I posted on Discord, but it's giving the wrong date. I don't know why. I'm a bit perplexed by it. So, guys, if you can bear with me half a second longer, I'm going to try and figure this out. I don't know why is it wrong date. Oh, it should be the correct date. I hope. Bear with me, ladies and gents. I hope. Okay. Now I'm doubling. Let's see. Right, I can see the chat. It's already somewhat good. Discord. God damn it. Discord is being an ass, as always. Okay, now it's sort of fine. Okay. And right. Sorry for taking so long, guys. I'm about to get started. Bear with me. Hello, Nerd. Hello, Jack. Hello, hello, hello. Don't forget to smash the like and subscribe and all that great stuff if you're not yet familiar, to be up to speed. One of the guys told me the price range was out of bounds and some of the other stuff. I tried to fix it. I mean, it looks fine right now. We should be able to see everything. So everything should be just fine this time around. That's first of all. Can't sell him out of market. Okay, no. All right. Give me half a sec, gents. As I said, I'm sort of trying to get everything running and it's still not running perfectly as I wish it would. The studio part is causing some issues. Okay, now I see it. Okay, now I see it perfectly. Angry Mix. Okay, hello guys. Market crash again. No, it's still the same one. It's, you see, actually, you know what? Let's start from that Angry. Hello, Angry. Look, most people, and I'm assuming you as well, your perception of the market is relative to date, relative to tomorrow. And by the way, if you've been following up, I have said that I'm going to make the bulls happy. And I said we're going to have about 2 weeks that are positive, which so far seems that I was definitely on point. Okay, just to kind of bring it about. So we had 2 positive weeks rather. Did get slightly higher than I thought it would. I did present potentially through the momentum that this is going to be the case as we were going. Did not think it's going to be that high, but still, as we were going, I was actually calling it out pretty much step by step. So call it as you wish. Angry, I'm not being ever biased nor to the downside. The fact that I have an SQQ position doesn't mean anything, and that's part of why we're here. We're here to discuss the technicals and not be biased about this event, that event, what we think, what we feel, based on our positions, what will be beneficial for us. It doesn't matter. We're looking straight at the facts. That's exactly the purpose of these lives. So 1 minute. First of all, those who noticed, we opened up today with a rather small gap. That's kind of got closed rather immediately. Let's call this immediately, all in all, within the first 45 minutes ish, an hour. So not a big deal. We can forget about this one. As you know, we do still have plenty of gaps, and in a second we're going to look, and I'm going to mention exactly what I've mentioned with regards to Angry, because if you look, first of all, the first fallacy that a lot of people do is look at the charts this way. Those who are familiar with me and my lives in general, my method in general, how you should be doing things right, the correct way is not looking this way, because then you're not going to be seeing gaps. You're not going to be seeing gaps. You're not going to be understanding the motivation of the market to move in any particular direction to do certain things. Okay, I also was told that I deviate from topic at times, and I'm going to try to keep it focused, so not to lose track of my point, because that angers you guys, and I'm going to try and keep on point, and then I'm going to get back to the chat, so you're going to have to bear with me a little bit. I'm seeing somebody is writing there. So 1 minute, again, doesn't matter much, and oftentimes I do like to skip it. It is a good time frame to find the gaps, and those who know how to work with them and their importance, of course, that's a good way to locate the correct coordinates of the gaps, if you will. But all in all, this changes back and forth a million times, and it doesn't matter what momentum indicator you're going to use. You need to be able to, unless you're a scalper, you should be able to focus far more on the larger picture rather than the 1 minute chart. 5 minute, very similarly so. It's not so detrimental. It can give you a perception of maybe 15 minutes, a half an hour of movement forward. The better you are, of course, the further out you can assess. Through this, we're already starting to see a bit of a reversion here, right? So let me just blow this up so it'll be easier to see. Hope everything is visible. I didn't forget to stream the screen this time. Everything is perfect. All right. So we're already starting to see some entanglement right here where the bullish and the bearish momentum are starting to basically entangle with another conversion, subsequently diversion, divergence, convergence. And this already implies on some weakness. This actually shows that this wave might be either broken into several partitions. In other words, we're going to have a correction on a correction, which is funny to see. But yes, that's in essence what happens. But let's say, again, the 5 minute chart is very short term, doesn't give us a perception on anything too serious. Right now, it seems as if the bulls or the bears are starting to push back, and potentially we're going to see this momentum completely go to a loss and correct back down to test certain levels, whether it's going to be the trend level or various other supports or resistances that we had from before, either solidifying them from now on as support or getting rejected by them to the downside. Let's look at the bigger picture. We'll get a better idea of what's actually going on. So 30 minutes, of course, dominant over the 5 and the 1. We're already starting to see that loss of momentum. I was telling you basically about this process, how we're gonna see instead of more bullish momentum once we cross over. Those who are more attentive, yes, it will yield slightly higher price points, but all in all, it will start to seem as if the price action starting to move within a form of a channel, more sideways rather than an actual incline. So for now, at least, we're not certain about this, but it seems that this momentum, if dragging us downwards, potentially easily will test that 5,566.16. More so, there is a very strong psychological support and resistance at a very funny location. Most of you will not understand, and my argument and suspicion is that this derives from the institutions and smart ass people that like pretty numbers, if you will, to put it in simpler terms. That's the 555 5.55. More so, actually, jokes aside, I'm not going to be surprised to see that the bots themselves decided this some form of a support or resistance and actually playing their role in it. So I'm not going to ignore that whatsoever. Could actually be a thing. So let's continue. On the 30 minutes, we're starting to get, and again, on 30 minutes, this is a time frame we can actually look at things in a more rational way and say, well, there is some meat on the bone here. We can actually have some prediction to the price action that will be substantial enough for us to look at. In other words, right now, potentially either we're going to have several more impulses right here on the top, as the market likes to do. We don't just go up and down, especially not on these smaller time frames. We do still a couple of retests. In other words, this is very normal behavior if we're going to see convergence, divergence happen a couple more times before we start correcting downwards. But all in all, this implies that we're running out of momentum, which is very visible. Basically, we're doing something akin to this retest of the levels, exactly what you saw around these 555 and 5550. So those are the levels that actually psychology plays a big role. Let's continue. 45 minutes. 45 minutes, something very similar, although not yet complete. Basically, from this, we can understand why this process is being so prolonged. We can actually, again, see the market is rallying up, and here it starts to take a completely different angle, something a little bit more tame, hitting resistance, seemingly hitting resistance, but really what is happening is that we're starting to simply run on fumes, if you will, running out of momentum. And more so, this time frame works a little bit more like a midpoint between the 30 minutes and the hour, right? And it gives me a good middle to try to understand when the larger time frame is actually spilling over to the other side of things, and I'm going to start to see these effects on the smaller time frame. But half an hour is so far away that I'm not going to be certain, so I prefer to look for the 45 minutes, getting that hint, the idea that yes, the market is starting to spill over to the bearish momentum, and that in fact amplifies my confidence with what I will see on the hourly. On the hourly, something I've actually said, we might see these processes are not as straightforward as some perceive, simply going up and down. This is more like a seismograph that represents the potential momentum that is being gained in both directions, because both things are happening at the same time. Don't forget, buyers and sellers exist in the market at the same time, and what we are getting is the outcome of both. And whoever is basically more dominant, we can actually see using this indicator. Using this indicator, we can perceive that we still either have enough momentum to go slightly even higher or hit our head on something and get stuck on it. What is that something potentially can be? We'll discuss in a second. Let's first go over the overall momentum. Let's continue. 4 hours. 4 hours is something I've been warning about, and this is a time frame that becomes a little bit better for us to actually perceive the worry that I was saying. Look, gaps open left and right as we were going downwards. Those of you who are more familiar, pardon me for that, just need to correct this one thing. Those who are more familiar understand that gaps are far more often closed than left to be. As you can tell, one of the reasons I hate gaps, we end up wasting in both directions. It doesn't matter. Whether you're a bull or a bear, it sort of is a waste of time rather than moving in a particular concise direction, but that is actually very normal. The market ends up retesting certain levels, and that's actually very normal behavior of the market. So we opened up a variety of gaps to the downside, right? Small, big, all sorts. Some of them were closed as we were going, in fact being opened up to the upside. That's a bullish gap right here and got closed very rapidly. The idea here is, and that's what I'm saying, people get very much caught up with the momentum they have been feeling for the past 2 weeks, and I was warning about it. If you go to the videos that are a couple of weeks old, what you will realize that's how the crab is being boiled, and that's the same way we move down and then we move up with the corrective movements, retaining just a portion of it. Just the same way when we move upwards, we move up, retain a retest, retain a portion of it basically, and continue to the upside. Same thing, but here we're starting to get a bit of an idea, more of an idea of a correction, of a reversal, right? A different trend. The direction of the trend, instead of being built upwards, it's starting to be built downwards. In fact, if you look at this longer overarching trend, if you break it down, you're going to realize that what's going on here is basically a movement down with a corrective movement upwards. Further down, lower low, okay, that phenomena starts to happen only on a trend down, well, actually lower low to be really precise, and then a corrective movement upwards. The fact of the matter that this differs from this doesn't matter. This is normality. What is more interesting, if anything, that we've started generating a trend resistance for quite a while here that have been maintained since 16th of July, just recently. Then we got to retest it on the 1st of August or the end of July, sort of during those days we ended up retesting the same highs, and this time around we broke through, and we broke through in a very interesting way. We basically generated the gap. This is already abnormal. There is a high probability that the market will go down to simply close this gap and the variety of other ones, although right now we're already sitting on a big reserve of gaps that have not been closed. And from my point of view, and again, remember here we're going to look, sort of retrace back to the momentum, and by looking at this momentum, and we will be able to determine this as we're going, if this, and the problem is, by the way, in the 1 hour, something I've skipped, sort of, and I hate that I skipped it, that the trend on the hourly chart was to the downside, but it got corrected, right, temporarily. So as you see, both trends, the short term and the longer term, are pointed to the upside. Does that mean, Greg? Well, does that mean the whole thesis is being thrown out of the window? Well, I will say no, and I'll explain exactly in a second. By the way, before this whole thing happened, I was looking at this and I had high suspicions because of the structure of things. And I don't know if one of my students is here in the chat right now, Tech Invest, a very smart guy, a great student of mine, very smart. I'm just straight up honest. And we were talking, and I realized that he was following every day. And I realized he would get very worried if I don't warn him about this particular thing, especially because we had a call during that morning. And I told him, look, I'm not going to be surprised to see the market actually break out of bounds and rally above, having a spike above that trend, breaking back down. A bit abnormal, yes, but during that moment, I've actually was able to forecast that. Again, I know it's words into nothing unless the person is here. Actually, he was here on the previous videos and confirmed it. You can watch the previous video, but then again, I'm not here playing games of trust me, bro. That's not the game here. You can, if you're a part of the community, you can talk to Tech Invest himself and ask that question. And I hate to admit this, but this is actually very expected. If you've been analyzing the market or in the market for a very long time and familiar with the price action behavior, and this is a form of a bull trap, if you will. Basically here, what we're getting here, we're getting this high, right? We're getting a break lower and a trend higher, breaking through the previous high, giving the bulls the feeling of, well, that's actually very common for people to say, well, if we've been going up, that means we're going up to the moon, YOLO, and various things. In fact, the market works completely differently. If we've been going up, that probably means we're going to be going down, either for a correction retest and only then up, or for an actual breakdown, right? One or the other. Sorry to say, but and I was warning about this even during the times that I was saying, look, bullish for a couple of weeks, but all in all, sorry to say, medium term, we are bearish. Those who know me better know that I'm longer overarching. If you're looking at the overall market, I'm bullish. That's just an inevitability. The natural direction of the market is to the upside. The companies show up and people go to work, and companies make efforts and grow and invent new things and give their services for a reason. They're not trying to be worse. No one does that. And time takes us to the right all the time. It's just something that cannot stop. In other words, our natural direction is diagonally to the upside, one way or another. Okay? So I'm bullish on the overarching, but right now, temporarily, as conditions are showing us, and we have to acknowledge them, otherwise we'll go through tremendous pain, we'll see that the overall trend is generally to the downside. And you're asking yourself, but Greg, we've penetrated this resistance. Doesn't that mean that we're going to be continuing to the upside? Well, no. Again, unfortunately, if we're looking again at the 1 hourly, which will be squeezed out probably during this session, if not by the next session, as I said, remember, this is not... I hate to use this word in terms of trying to time the market. It's not an exact science. When predicting the supports and resistances, it's far more exact and accurate, right? But in terms of time, well, I'm going to give a rough estimate because, again, I'm not timing the market, something I don't like to do for various reasons, but it doesn't seem like we're far off. We're pretty much already running on fumes, yes, squeezing a little bit more, but this is going to die out, I think, rather soon. Close this gap, retest this median, and continue to the downside. This is when the trend will be corrected back once we'll penetrate back into the downside. In my assessment, just my opinion, you do you, right? Not financial advice. This 1 hour trend will be corrected to the downside and will be more visible that we are continuing down. The same way the 4 hourly, which is far more dominant over the 1 hour and in general implies and allows us to perceive a longer duration behavior. The only difference between the 4 hour and the day, as I said, the structure is different because the day normally when looking at an asset allows us to see pre and post market, and basically it is very much identical in essence to the daily. How can the contradiction be between the two? Yes, that can happen, but more so I will say read into the granularity of what it allows you, and more so I personally prefer the 4 hourly time frame. Why? Because it allows you to see that granularity. The problem with the daily, that the day candlesticks engulfs the pre-post market and does not allow you to see gaps and does not allow you to measure beginnings and ends the same way you would on the 4 hourly. The daily has its own benefits. In fact, it's one of the most important time frames to look at, but still you need to know its limitations as well. You need to be aware of them, and of course not to try to seek something that is invisible on that time frame in essence. Okay, now that's when we're done with that. Let's continue to the daily. Before I continue to the daily, I'm going to stop for a second. If you guys don't mind, I want to check the chat, what's going on, right? So I'm not missing, as I promised I will. Let's see. Taste of 20. What is that? When market correction? How much correction? Follow the information and you will make your own conclusions, and I recommend learning technicals so you can understand whether I'm an idiot and I'm talking out of my ass, pardon the French, or I'm actually talking something serious, and you should be aware of this. I'm simply showing you what I see, and I'm giving you my own interpretation. There are plenty of people who say otherwise right now, and who's to know, maybe I'm an idiot. The fact that I was able to predict things before in the past, no one knows if I'm correct this time around. That is something I have to emphasize. My SoFi stock is up. SoFi is actually doing very well. It's interesting that you mentioned that. I actually given it a look today. And I've been giving it a prediction of $4. Those who are aware, we are still basically retesting the range of 8-ish to about 6, it seems. About the range of $2, moving between, stuck in that range. Again, you can see how we've penetrated into that range again, right? We've been testing this forever and a bit, and now we've moved on. Those who are attentive, what happened during this very prolonged process, instead of that being our floor, now this is our floor. So it's through a very grueling, very tedious, slow, god damn it, I'm so sorry, through a very grueling, tedious, slow process, we ended up moving from that support to this support. And I was warning you, this is a very grueling, very tedious process. So again, the resistance that was the resistance here is no longer the resistance. You can see the resistance is $8. I told you and warned you, it's not going to be an overnight thing. And when I expect the market to drop to 4 will be closer to when the overall market will drop. These assets are tied in with one another. Don't expect this asset to fall for no good reason on its own. In fact, while conditions are permissive, it will probably continue to be moving up and down. Basically, this is heaven for traders. Doing these swings up and down, the exact resistance, it doesn't matter. No one really waits to the exact, to get out of the exact 8. Most people are smart enough to, jump out, ditch this boat at 780, 790. Only the madmen wait all the way to 8 and then some, right? When you know the resistances and support, no one tells you wait for the last second to be through the door. If you will be waiting for the last second, you'll be the last one. So, so far nothing changed about it. All in all, when the market will drop, it's due to go to about $4, in my opinion. That's kind of where the support will end up being, in my opinion. Of course, this is very early to say. And as I've said, later, when the market will actually start a deeper correction, will be smarter to say. Right now, we're not even certain the correction is in full steam, or am I completely an idiot and wrong? So, but this is it ties into one another. Don't expect SoFi to break for no good reason unless it has really bad news. And even then, those still probably are the same supports, but then I would still want to see 6 being broken, being retested as a ceiling, 5 being achieved, retested, and even if it will break to 4, the very next day it will probably correct back up to 5, 6. None of these processes are linear, and if things will get real bad, yes, expect to see a number that is lower than 4. When I say that a certain number represents a certain support, it doesn't mean you cannot expect. In fact, you should expect the price action, because slippage, the price action slips through the support, doesn't mean the support has failed. It just means that the market does its action, and we're right now testing and doing the tug of war about this particular level. And it will take time to conclude who's going to be the winner. It's not going to, today we're up, today we're down, and for 3 days we're up or down. It doesn't matter. You have to look at the bigger picture, unless you're a scalper and day trader. If you are, good for you, but you're not going to be looking at these time frames. You're going to be needing to know the big picture, not to fly off the cliff. Those who know, but more so, you'll be focusing on a smaller time frame. So these don't matter for you today, but also you need to understand that on the grand picture, the grand scheme of things, even if you're going to get back to 8, if you don't do anything with it, you're just wasting time. right? The day traders are the ones to profit from all these movements that accumulate a good average. If you're a long-term trader, you shouldn't be buying with both hands at 8 unless you know technical analysis and you can confirm to your own self without listening to idiots like me. Maybe I'm wrong. Again, guys, I reiterate and say, maybe I'm wrong. Maybe the other idiot is wrong. Never listen to anybody. Gain more education, gain more knowledge, learn, listen. No one says don't listen to the experts, but take their advice or word with a grain of salt. That is about SoFi. Let's go back to S&P. I'm going to finish reading the questions real quick. Try to answer what I can. Puts or buys, short calls. I'm not doing options. That's not for me. Sorry. This SPY is gapping over. I'm not looking at SPY, I'm looking at SPX. I say always go to the source. Source is far better. SPY is a derivative. It's going to be smoothened out. It's not going to give you the full extent, the range, and the ability to measure everything you want to in the same way. SPY is inferior. Even when you're trading directly SPY, I say go make your analysis on the SPX, then go back and perform with the SPY. And I, in fact, say do your analysis on both. You should be not trading, especially trading the SPY, unless you are analyzing both properly. Not that long, not sure what we're talking about there. I'm probably missing something. And how will this downtrend take? Which part of it, Michaelis? It's which part? Again, if we're talking about short term, it might as well take, a month or two, but then a correction for that, right? If we're talking about the overarching thing, which I'm going to be finishing the video with, you will see that our 12-month chart, if I'm allowed to jump over, just kind of skip over for a second, these are the smaller time frames could be compared to a bicycle. A bicycle has a turn radius, right, of sheer millimeters, centimeters, whatever, whatever you want to call it, right, inches. Because it's capable of it. A bus is a bigger entity, right? It takes slower, it's a bigger thing, if you will. Imagine this is a bus, a double-decker yacht, in fact, I don't know, whatever you want to call this, in comparison to the bicycle. So the 1 minute is a scooter. So can you imagine that the 12 months is, like I said, this gigantic tanker, if you will. That these turnarounds and processes are very slow. To be more precise about things, and just kind of for you to notice, since the unpleasant days, right, when we broke down, this process within itself took 3 years to go sideways. People don't see that unless they are very attentive to these processes and don't realize themselves that this is a part of, if you look at the overarching sort of longer term cycles, we don't know, this might be part of this longer duration retest, which is very normal. We see these things, but what most people don't realize, they look very small, very pleasant. Not a big deal. No. This is, guys, this is 2007, 2009, and well, subsequently 2010. This is the second correction of the dot-com crash and tech bubble, if you will. So a lot of people also don't know that the two are actually highly correlated and connected, and in essence this is an outcome of this, and potentially, given this wouldn't have happened, this wouldn't have needed to happen as well. This is a very, really tricky thing that you need to know about and to understand why these sort of cycles happen, and more so, what are the entities in charge of most of the liquidity in the market and how that affects the everyday trader, right? So the big picture here eludes the vast majority of the market. I might as well be wrong. This might flip over. We might get so bullish and that we might turn around. These sort of things can happen, but be objective about it. Here you're looking through the index since its inception, basically, and you can see, it didn't really have that moment where it sort of did that, and even when it does these corrections, they are very temporary and switches back over, finalizes its process, and only then continues down. I would argue that this time around, instead of being where some people might perceive as being here, we are actually here already. And remember, this process will feel rather light. Okay, the in-between will feel rather light, especially when we're having so much exuberance to the market. The market is very frothy. It's extremely frothy. It got extremely inflated. There's a lot of money on the line. And I'm not surprised to see how this downwards momentum, instead of actually bringing us downward substantially yet, all it has done is mitigated that bullish momentum and starting to slowly overturn things. And if I'm correct, and this will continue in that direction, will find itself here at the bottom, at the oversold territory. Just the sheer process, as you can imagine, if every single candlestick on this chart represents 12 months or a year, in other words, and you can see how it clicks over for every year. Can you yourself imagine a drop from where we are right now? Pardon me, let me try and measure it for you, right? From here to, well, I mean, can you imagine a single candlestick, right? A single year giving you, or remember, we also still have 4 months to finish this year, right? So it really much depends where this year is going to get closed. Right now, we're quite high, very abnormally high, in my opinion, and through my analysis, we're completely out of bounds, and it's very unnatural for the trend to want to continue to the what you can perceive as to the left. Right, the left trend, if you will, the left channel that is above us, it's actually the past channel. The market, in actuality, if you look over the years, have a far clearer tendency to continue into the right side, because that's where time takes us, right? And this is far too high for the relative amount of time, and no one says that cannot be, but these things often go through corrections and retests. And more so, you have to understand that most people here basically look at adjusted charts, and most of us do not look at them in unadjusted form. In unadjusted form, first of all, it's really difficult, and you really need to know what you're seeing. Really realize that we've been going through this uptrend for a long time, but every notch, if you will, every period, every part of the cycle, there are very prolonged retests, and they might seem very tiny right now because I'm not zoomed in on them individually, but if you're going to be attentive and in reality to what inflation has caused the dollar, because remember, the dollar has meant a lot more. Ignore the numbers here, I have to kind of open up so you can see. We're talking about again, the tech bubble, we're talking about the housing crash, where we're talking about give or take. And if you're objective, you're looking at the wicks instead of having a line chart, you're going to realize that you are, pardon me, we are talking about 57% correction downwards. Most people are inobjective. Why? Because look at this. We can clearly, distinctly see this is the bottom, right? And simply, if you have not been in the market and you don't remember or don't look at the chart the right way, for you, the bottom will look completely different. The market will look completely different. This does not change reality. The problem with this, that if you don't see the candlestick, you don't realize that the markets were down to that level, which, as we said, 57% down, which is 60% more than half. Imagine your portfolio going more than half. Can you bear that? And imagine the people that started here at the top, and we're being, often people, well, this is cheating. No, this is not cheating, because the people that broke even, that got into the market here, broke even here after 13 years, here's the same thing. This is no cheating. It's the same cycle. All these people took them roughly about 13 years to break even. In fact, those were lucky to some extent. At least they were able to endure this process and potentially get in and out in DCA the correct way. DCA here, not DCA through the whole thing, DCA here. The trick is not just DCA from the top, right? Recognize when the market is, for whatever reason that is, cyclical, non-cyclical, black swan, whatever reason it is, going through corrections, okay? And be objective about how you see it, because when it's adjusted, it looks very tame. When it's unadjusted, you realize that the market have been doing that same trick over and over again. This is no news, okay? Now, let's continue. I think we were on the 4-hourly, daily, somewhere like that. Now I've made a big boo-boo by skipping over. SoFi, more SoFi, double bagger, multi-bagger. All right, I like that. Hater, useless. All right, success is not exactly very correct, Alan. Very good. Yes, future results. However, it's very good at this. I can admit I have lost more money listening to him than listening to him. I'm not sure listening to whom. Listening to whom? You're confusing me. Him than him? Everybody's him. The problem when I used to work for, in general, it's a known factor. That doesn't matter. It's a known factor that just like the market, a lot of people in the market gain in droplets, just like the market, but then lose in buckets, basically go down by the elevator. And if you're not prepared for this and do things the right way, you end up losing more than you gain. What you end up being is you're being a sucker that collects all that money for the institutions, and then they strip you off of it in one go. So, I mean, you ask yourself what you're doing right, what you're doing wrong. I always recommend on more education. This way you'll be smarter and make less mistakes, or at least repeat less of them, and understand why exactly it was a mistake. Because understanding it was a mistake is not the solution. You need to understand why it was a mistake and how not to repeat it. So far, my NVIDIA has been good to me. I'm sure, yeah, Mike, I'm seeing NVIDIA is kind of rebounding and all that, but my prediction since the before the split, overall, again, relying on an overall market correction. It's not in mid-air up to its own self. NVIDIA just crashes. There could be high correlation between NVIDIA crashing down, but my assessment here is very simple. Take those 300 that I perceived NVIDIA to drop to, which I know it sounds insane to most people, but I've predicted a lot more insane things in the past. You can ask in the community. Shout out to our Discord members. 17,000 people and ongoing. It's insane to even say. Of course, all of it is due to Tom. I think maybe 100 people there due to me at best. But it's an amazing community, great people. Highly recommend. The links are in the description below. All that wonderful stuff. Both Tom and I have our academies in there. I highly recommend looking into it. Don't forget to confirm the rules. Otherwise, you will be stuck in limbo like some of the people there. Very important. Read the rules disclaimer and confirm. Otherwise, you'll be in limbo. Okay, there's that. Where would you expect NVIDIA to drop to? 30. It's a 30, yeah, but it's far. It's really far. I understand. You have to understand the correlations between the things I'm saying. It's not going to be happening on its own, Thomas. It has to do a lot with the overall market. But it should be at the 30 range. I could adjust as we're going to go because NVIDIA has done a lot since. It could end up being more closer to 40, maybe even 50. But the old, you know what, maybe I should re-examine it again and actually give more precise analysis, although it has a lot to do with the correction, and I do need certain assets to make their move to read them as indicators to the asset, if you understand how the process works. So it's really early for me to say. In Greg we trust. Elon, don't in Greg we trust. Don't do that. No, I might be a freaking moron, you know. Or just wrong. You know, the fact that I've been correct in the past doesn't mean I'm correct this time around, literally. And I'm absolutely serious about this. Guys, you know, what I'm presenting is what I'm presenting. Because if I'm right, it's going to be a travesty that I didn't present this information. Hey, Alex, good to see you, brother. Hey, Midwest. Midwest Cannabis, salute to you, legend. Always shows up. Yo, you're a legend. An absolute OG. I really hope we have you on Discord. Please give me a shout out on Discord, man. I'm curious to talk to, get to know you. You are one of our OGs, man. So that's that. Smash the like. Alex, thank you very much. Yeah, Alex is right. Smash the like, subscribe, ring the bell, move it to everything so you'll be informed when I go live. Otherwise, at some point I'm gonna start just kind of neglecting, I guess, and sometimes I do, you know, informing in the Discord. I hate to say it, guys, but time we all get to be big boys and big girls, be responsible, you know, transfer the thing to the, you know, transfer the bell, ring the bell, do whatever it needs there so you be up to speed. Otherwise, you'll miss these, and even if I'm wrong, you'll know exactly how mad Greg is. All right. By the way, shout out to all my Israeli members. I'm sorry for being so particular, but I've been on a live call of another YouTuber the other day, and then I had a lot of people there ask me if I'm from Israel. They were very surprised. Turns out there are plenty of viewers I have from Israel. Shout out to you all, legends. And shout out to everyone who stayed this far, because this live is taking forever. At least I hope you guys are having fun and gaining some knowledge or whatever that is that you are here for. And Greg, what do you offer on your personal Discord per Patreon? great fun, great community, all that. I'm not here to sell it. It's up to USC. There is a private partition to it. I really am not. Tom and I are really, we're shitty salesmen. I'm gonna be honest. I'm not here to sell it. I'm just kind of, putting it on the table. You like it, not. It's up to you. We're not begging for people to join. It's for them to decide whether it's for them or not. It's a community. It's a cool place. I would say it's a great resource. Just like any Discord community that the thing is ours. I've built it. I'm very proud of it, with a lot of help from Tom, and of course, it's Tom's community. At the end of the day, it started off as Tom's Discord. We ended up having our Discord combined in the same place. It's far more beneficial and helpful for both of us. We do not, I don't benefit from Tom's profits from whatever he does, but also Tom put so much money into the community just with the giveaways and the bots and the monthly fees. He pays for everything, which Tom pays for everything in the Discord, guys. I'm just gonna straight up be open. It is what it is. I manage everything. Tom pays for everything. But we try to keep everything clean, organized, and a great place where we try to keep it to be a place where we ourselves want to take part of, right? If we would have been members and not YouTubers, and we wouldn't have our community, we would want to be taking part in a community such as that. That's what we're trying to make it. That's why it's always developing, growing, changing, and all that wonderful stuff. How much can VIX spike? VIX, actually, you know what? It's interesting that you mentioned VIX. VIX, oh sorry, where did I have my VIX open? I just had my VIX somewhere open. Where? VIXy. Yeah, here's my VIX. So VIX, by the way, VIX doesn't like gaps. And part of the reason why this was obvious that we're going to have this correction is because of this gap. VIX hates gaps, right? For example, like the same way certain things happen in the market, we knew the market will go a little bit more tame for a little while. But the VIX, you guys need to understand how does the VIX work. It's more of it really is almost an indicator within its own right. It's almost like a seismograph. Okay, and whenever you have these earthquakes in the market, it goes wild. Otherwise, it's not a normal asset. Okay, so just for people to understand, the VIX right now the VIX had a chore to complete. Look at it this way: the VIX had something to do, because the VIX hates gaps. So today we saw this correction downwards again. This is why the market, it was very predictable to see the market sort of chill down, if you will, right? And from here on out, we'll see, right? That's kind of the problem. This is why those who take part in the community and often hear me refer to such days as a waste of time, because it is. We end up opening gaps, a bunch of holes that we end up needing to fill, and waste of time. This doesn't matter to whom. Bulls, bears, all in all, this is not good. We end up moving through the same ranges. If it's through the VIX or the same overall idea, it's just stupid. We have no progression. But VIX, again, its progression is different. It doesn't really have true progression as you would perceive on an asset. It's a seismograph, okay? It allows you to understand the volatility of the market, okay? Of the S&P, in fact, if you really want to be precise. And all the major indices, because they move in tandem, if you will. Honestly, guys, just for future reference, if there's something I hate is the question of what do we offer on our Patreon or Discord and all that stuff. It's up to you to decide. I mean, kind of hate that question. I'm sorry. I'm a shitty salesman. I admit it. I'm a shitty salesman. If you can already if you want to really classify me under some sort of form of salesman, I'm an old school guy that knew everything about the product. Okay, that's what I like to be. I don't like to be the guy who give you empty promises and bullshit and all that. And that's not me. So it's up to you. VIX can spike quite a bit. It depends on the volatility, as I was saying. Course NFA. Don't know when I can. I'm missing you guys. Of course, Voice Chats Academy. Yes, we have academies. Tom's Academies is in the Zoom call. My academy, my course is I do one-on-ones on the Discord itself. I teach the advanced tools that I use, the basic tools, build foundations so the students can understand, how it's all connected to one another. The course itself splits into 3 different modules, but as everything else, just like you build a house, you first build a foundation. The first module is what everybody, unless you've already been through the first module, need to go through. In fact, the first module, when you're done with it, doesn't mean you're ready to proceed. You practice and you practice, and you really get better in understanding these tools and how to use them and how to read the market. And only then, if you feel like, I'll consider if it's the right thing for you, and only then you might proceed to the second module and so forth. But everybody tackles the first one, foundation. Voice Chats Academy. There's always great information about TA. Nannies, I appreciate that. Thank you. I do my best, what I can bring to you guys. I tried Tom's Academy for 6 months last year, then decided to save my money. Okay, that's up to you, Teddy. I'm certain that it's easy for you to say when you learn everything that you have, and now that you do possess the knowledge of the first, I would say, 20 lectures, and then on out. Of course, if you choose to learn more and become more advanced, and if you think you know everything that Tom knows, no, you know everything there's still a lot more to know. But then again, I'm not advocating. If you feel that was the right choice for you, that's good as well. You see, we're completely open for criticism. If you feel that was the right choice for you, I'm glad that that's the choice you took. Definitely not offended, and more so, we understand that people come in, people come out. It's up to you guys. What else? How did you like it? I'm not sure, but I don't think I'm seeing all the chat comments. Maybe you're not, Nannies. You need to switch to live chat on the top. In fact, I've done that mistake. I forgot to do that. I'm in top chat as well. I might not be seeing all the comments as well. That's why. Now that makes sense. I forgot. There's a live chat tab thingy. Some good nuggets for again, that's Ted's opinion. I'm not gonna I say what Tom teaches, and I've worked in the industry and I've met plenty of all sorts of analysts. Tom is one of a kind-ish. There are very few people on that level that run through a balance sheet. We all can, we all do, but at the rate, speed, and accuracy that Tom does this is like a computer, guys. This is phenomenal, and Tom runs through fundamentals and the balance sheets the same way I run through technicals. It's hard to keep up, and I would argue that again, it's just my opinion, don't get me wrong on this, I think you shouldn't have left. There's a lot more to know. Tom worked for Deloitte as one of the guys that are being sent to company B by company A to analyze how much company B is actually worth. Literally one of the head analyst guys, the prime of the prime. So I wouldn't just shrug it off to that, but it's your choice, of course. That's it, guys. I need to go continue back to the thing. Otherwise, we're gonna spend here with the chat forever. I'm so sorry. What are your thoughts on day trading? Javik, talk to me about it. I know I've been, there's a lot of people, a lot of guys and girls here who want to get my personal opinion on things. Since I need to get back to things and finish this live at some point because it's taking forever and some people here have a life, probably tired of listening to my dumbest voice. Javik, reach out to me on Discord, jump in onto the voice chat. Talk to me, I'll be more than happy to tell you. All right, sorry for that, brother. I just want to finish this chat, at least this part of things, so people can go do their things. Because it feels like I'm delaying. So let me remove and clean up some of that dirt. Let me be sure I went over the day, guys. Did I go over the day? Have we spoken about the day? The day is what I said. It's moving towards convergence here. This is not good news for the bulls. It's all very simple, unsurprisingly so, and I've mentioned this when this entire rally started, if you want to call it. Well, it is. It's probably the best 2 weeks, all in all, if we had throughout this year so far. But all in all, remember, notice, so we done 10 steps down, 9 steps back. As long as we're going to repeat that several times, this is how the crab gets boiled. All right, so keep that in mind, and we're getting hints of that right here. You do you, of course, not financial advice, just my opinion, blah blah blah. Let's continue. That's the daily. The weekly is a bit complex, and I know that some of you are not aware. I'm not gonna, because they maybe haven't followed the previous videos, are new. So pardon me for the OGs here. You'll have to spend a second listening to me talking about something I have before. Once we switch over to the larger time frames, things are not as straightforward as you would perceive them normally. What starts to happen here, you're getting longer duration cycles and waves, if you will, the same way we had a correction downwards, basically a cool off and a continuation into the oversold territory. And this entire period, just to give you a perception on things, took about 70 days, right? So through 70 days, we can do quite a bit of damage, right? Just during that duration. And more so, I want to emphasize how the market, once penetrates into oversold, gets amplified with the effect, overbought, amplified with the effect. This is how we get these rallies form, right? You can see that most of the rally in reality didn't happen here in this partition. It happened here when we went flat, but flat in, you see the correlation between the things. Okay, it doesn't. The fact that we go flat doesn't mean that we're not moving up. In fact, once we do that in the overbought territory, it's probably means that we're going to be running even faster, higher, right? Same applies to the bottom. Okay, just to be clear about things. Now, why do we think that that's the case? Well, let's go further out. The monthly, and this is the scariest thing I've been trying to warn people about. We've been running hot for quite a while. We've tested it to death. The impulses and the way the structure of the impulses implies to us quite a bit. And here we are not seeing objectively, because it engulfs this momentum, even engulfs part of that action, and does not represent we're already partially doing this. We're already having somewhat of a turnaround, of a flip around. You're not able to see it yet until the month will be complete in 11 days, right? Even though we had that correction for the last couple of days, I would argue we're either going to see this flatten out or in fact start to form this divergence convergence structure, normally allowing the bearish momentum to take dominance, and in fact giving us more reasoning to think that we're going to be going downwards, because these processes, the month itself, let's say we predict only using this structure, we predict only 2 months from this point out. Only two candlesticks makes sense, but that's 2 months. 2 candlesticks are 2 months, and it's not that difficult when we're already seeing the trend and we're seeing the direction. And I would argue that even if it's not going to be this particular candlestick, it probably is going to be the next one around. Okay, now we still want to be aware, very much so, what these larger time frames are implying to us, and very much so, as I was saying a second ago, it's very important to understand how these cycles work in the market. Give me a sec, I think I moved something. All right, so very similarly, I'm going to give an analogous example right here, right? How this structure was being built up, right? The same way we're going to have potential. Again, I'm not saying this is the back end of this trend or something akin to this. It is just a similar behavior. So right now we're basically, even in the trend structure, we can see we're sort of building lower lows. It doesn't matter if it is lower highs, lower lows, and slightly slower moving to the downside. This, again, is a very slow interpretation of the thing. I'm sorry that my lines are not perfectly in line. If you will, it works more like this. No, we're not that much out of bounds, and it doesn't have to be perfectly in line. It's not it's not measured with a ruler, if you will, not this particular phenomena, but more so we'll understand why we were worried about this. Again, the overarching bigger trend, the thing that we really are afraid of, appears to be on the yearly and not on the smaller time frames. Although those who are attentive and understand what potentially is going to happen here is that slow turnaround on the smaller time frames, which will subsequently, over time, in about a month and 12 days, when this next candlestick is going to show, either going to show a flattening of this curve or in fact a deepening of this process even downwards, basically having a formation like this. The fact that the market seems as if we're going up and then switch immediately down does not really work like that. That's just the way we perceive it, because over the longer period of time, like I said, just like a bus, right, or a tanker, if you will, this process appears to be very slow. We're just seeing, we're hyper focused on the granularity, right? Remember, on the daily, if you're able then to see and realize, wait, we have changed direction. Although we were moving upwards, now we're no longer moving upwards, we're moving downwards. The same same way we had during this unpleasant time. Notice what happened. This change is very difficult. Here we had the reasoning and the logic, right? I'm going to say, look at the years, you'll understand exactly what I mean. Here we had the logic, right? We had the reasoning. More so the technicals were showing so as well. But here we saw, again, the same phenomenon. Market go up a lot, correct a little bit down. Market hit a wall. Market start to do the opposite. A lot down, seems like a lot up, but not enough. And then again, the same trick. And by the time you realize what's going on, breakdown. Okay, but here we had a reasoning for it. We understood why. And I would argue, by the way, that now we also understand why. Then there's many reasons why this is going to happen. Recession. Sorry, I had a recession bug in my throat. Sorry. And other things. And everybody's relying on Trump to be this magical fairy that just going to fix everything. I am definitely for Trump taking this election and making America great again and all that wonderful stuff. And it's not about politics here. It's just, come on, you have to be living under a rock or I don't know where not to see what the Democrats have done to the U.S., which is horrible in various ways. Just no matter how you flip it, or no matter from which direction you look at it, what they've done is just a nightmare. And you know what? As magical as Trump is, it's going to take forever and a bit to fix. So that's just the reality of the thing. I know that 3 month is confusing, and I would argue you guys don't trust me nor my indicator. Don't use stochastic RSI for that instance. Use something else that will give you confirmation bias to see what it is that I'm talking about. Or, for example, the opposite. Say Greg is an idiot and it's wrong and it's going to be going up into oblivion and the market will skyrocket into 6,000, sorry, and further higher than that, right? So 6 months, half year again, very similar, but the same way I will tell you guys, notice these phenomena are smaller processes that happen in larger processes that most people struggle to even perceive. The same way we had here, this in essence represents a wave, more of a seismograph. Remember, right? The lows and the structure and the direction of the market is dictated by completely different things, by recessions, by economic downfall, geopolitical tensions, oil prices can play a big role. We haven't spoken about these in a while, although relatively, all in all, right now we're low to relative low. 73 is very low at this point. Those who know, I've predicted that we're going to be hitting the high 80s at this point, maybe even the 90s. And those who think that something changed and from here on out, magic fairy have fixed everything. There is the story of Kuwait finding a big reserve, which we're kind of seeing. Also, there's a lot of normalization and the promise of Trump allowing a lot more oil resourcing in the US and other factors playing in right now again to why oil sort of were allowed to go lower. Does that change the bigger picture? No, we are actually already starting to revert back. Those who are attentive, yes, this basically allowed this correction that we already have seen in the past several months. But all in all, this was just a minor inconvenience in the overall process. And if you are attentive, you're going to realize that the trend of oil have been going up and steady for a long time. It's just that there were abnormalities. We ended up retesting certain things. All in all, the market basically ended up going far too high, correcting back down, and now starting to want to correct back up. Okay, or in other words, in very granular form, here we go. Okay, so all in all, the direction, still I know how you see this, and this can be a convergence, a temporary slowdown. Still, you need to understand that 70s is a very high area for oil. And yes, if at first smaller companies can bear the brunt of the pain and the bigger companies don't care, and you're like, well, it's only it's gonna start eating away at our profit margins at 80, 90, no problem. But ask yourself, how long can these smaller companies endure $70 oil? Okay, just ask yourself that question. It's a very important question, because the question here becomes not how high oil is, but for how high is it relative to how long it is stuck at that price, right? So oil still is a big factor. That's that, and blah, 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 where were we? That's it. I think I've already summarized the yearly, all in all, still overarching bigger trend. 6 months is going to correct down. Once we're going to start to see the 3 months start to correct down, we're going to see these converge, longer overarching period. 4 months for the next candle, for this current candlestick to close, and the next one start being generated. So we have a lot of time to go, and this entire thing, oh well, I made a boo-boo, but no one cares right now. This entire candlestick can correct downwards, so much so that, well, you can't really perceive it, but if you see the wick hits somewhere right here at 5100, can actually get back to that 5100 during these 4 months and even exceed it lower than where it is. At this point, I think I ran through all the time frames and you guys understand everything, I hope. I've the person who wrote to me on Discord and the review and some tips on how I should be doing things. I hope I took everything that you said and corrected on all of it. I hope I improved on everything and you are now a happy camper. So sorry I'm late. My boss wouldn't let me leave my office. That's okay, Brad. Are you kidding me? Are you kidding me, bro? You joined. That's already magical. I appreciate every single one of you, ladies and gents, who took the time to join in and out. Doesn't matter. Agree, disagree. Well, that's not what we're here for. We're not here for drama. We're not children here. At least we're not supposed to be. If you're young and you're into this industry, I salute you. That's respectful. I was definitely busy with other things at these ages. We discovered recently we have very, very young members, and we're just completely astounded how young nowadays people start to get into the industry. Ted T, what is the bottom red blue indicator? I'm assuming what you're using. I'm assuming you're talking about this. Oh wait, you're talking about this. It's the stochastic. It's the orange and blue stochastic RSI. It's very similar to the RSI. It simply allows the exceptions to be removed in a way, and it gives you a longer sort of exponential way of looking at the trends, and that's why it doesn't work like the regular RSIs. You notice the overbought territory here starts at 80 instead of 70, and oversold territory is at 20, although in reality you can adjust your regular RSI to be stochastic, to be exponential as well. So that's not a big deal. You can actually do that by going into the settings. It's just simpler to use it this way. It already works. Thank you so much, Greg. My pleasure, Essie. I hope you all enjoy that. Ted, I hope that answered your question. Okay, Seelan's replying to Javek. Again, you guys are awesome. You're all more than welcome to join our Discord. And my pleasure, Ted. Talking to one another there, have proper voice calls instead of writing to one another with zero emotion, and people get frustrated and angry with each other. Guys, that's why we have the Discord. Join in, talk to one another, share your opinions. We're not about drama here. At the end of the day, it's all about money. Okay, I don't care if you think my ideas suck. Or my choices of stocks or whatever. It doesn't matter. At the end of the day, money talks. All right, and you know what? You can ask Tom. You can ask the community. I was able to predict many moves, right, perfectly, down to sometimes with the differential of the margin of error with several cents or a couple of dollars. And I wasn't always able to perform perfectly on these. I'm human as well. It's like being able to predict the future doesn't mean you can play out the way you want it to, right? In fact, you'll fail many times. Just to let you know, I mean, that is the real thing, bros. No joke here. You can ask Tom and the rest of the community. Affirm was a glaring thing for me. I've done many successful trades on Affirm, and I also failed on Affirm several times. That happens, even though I predicted the move. You can ask in the community, ladies and gents. So go ahead, a couple of quick questions before I'm going to jump off, because I see people are already dropping off. I feel like it took forever. I have no idea how long the stream was. Probably no one will watch it, and then I'm complaining no one watches my shit. So yeah. I hope you guys enjoy this. I really am doing this for you guys, because I obviously know everything I know. So yeah. Will Affirm get to... I'm impressed by Firm. Firm rallied all the way to 28 almost. I mean, it done like almost like what is it, 40% all in all. I mean, 30 something, but it's still impressive because the daily is like 10. Those who know, Firm has impressed me. No, Firm I still expected to go down with the rest of the market. I mean, I predicted the move from the 50s down to the 20s, and so far, I mean, we didn't hit 20, but we were like at 21, I think. So technically, again, I was off by $1, if you will. Although I do think that wasn't the all in all. It's just a firm. A firm, those who know, is very volatile and does all sorts of funny things. I mean, why am I talking about the firm and not showing a firm? I mean, 29.67, right? So pretty impressive, pretty goddamn impressive. I have not. Well, I didn't see this happening. I thought we're gonna test 25. I mean, this just goes to show that the market still has not confirmed that 30 area, which we actually have a resistance here at 30.55. So be aware. Although I remember we do have something in 29. Yeah, I mean, maybe that, whatever that is, it looks like a leftover of a gap. But again, this is not the full chart. I'm sorry, I don't have the full chart prepared for this. This is just. Yeah, this is YT, so it's empty. Yeah, sorry for that, but I mean, 1897, that's the 19 area that we're all familiar with, that we saw before. Yeah, no, I mean, again, this is all, I understand. Look, again, just be objective from up close and personal. You know what, guys? Let's look at this. This is a good example. Who brought up a firm? Oh yeah, that was me. Okay, good. I'm awesome. Cool. So look, if you look at this on the daily basis and you're too caught up with the day-to-day stuff, so you're like, look, Greg, it's up, it's amazing, it's this and that, blah, blah. Right? But then you zoom out and you realize that all in all, it's not up. No, it's been going down systematically, right? I mean, technically this, right? Systematically going down. I mean, come on. It just depends what your bias is, right? But if you apply, then you have to ask yourself, what if I apply no bias? I mean, and I'm not saying this is a bad company, guys. I love a firm. A firm has a bright future. Max Levchin is a goddamn legend. Those who don't know, Max Levchin, the CEO of a firm, is one of the PayPal mafia guys. In fact, he's the coder. He's like the actual brains behind the stuff. Like, he's the guy. You know, Elon and Thiel were the guys who came up with the ideas, right? But Max was the guy who actually to do things, and he came up with this idea before Thiel. I mean, I think, as far as I understand, Thiel and Elon, in a way, they all kind of thought about these things, but the form and the form factor that we're familiar with was something that was up to Max's department. And Max now then started his own company of buy now, pay later with no delinquencies fees, and they just basically go by measure of sort of trade to trade method, basically. Well, what's the word I'm looking for? Pardon me, guys, I'm blanking here. Transaction basis, basically. Even if you always performed well, had no delinquencies, everything is fine, economic conditions are problematic, they know how to tighten up, so the company will remain solvent and healthy, and the balance sheets will not look painful, so the stock will not drop. They're one of the favorite playgrounds of the day traders, of the guys and girls on Wall Street. They love a firm, just gonna say that. So yeah, a firm is great, but short term, you have to understand that a firm being great, it's, again, we said, it doesn't matter how great the stock is at hand. You cannot drown out a tsunami with a bucket of water. Even if you hold 2 buckets or the bucket is really big, not gonna help you, buddy. It's a tsunami, okay? And more so, by the way, remember that a firm having so many partnerships is great, but it's also what will bring all the pain about, because when these companies are affected, guess what? A firm is affected by the effect of the chain reaction. Okay, so you do you, of course, but my opinion is that the firm is far from finding bottom yet, and pretty much everything else as well. But that's just my opinion. I could be an idiot. Never go all in. Very smart, my friend. Ivailo Stoyanov, you, sir, are 100% on point. Never go all in. Always have some dry powder, always understand that things can get worse, always be able to analyze things. Don't rely on talking heads on the internet or on the media or anywhere. It doesn't matter. Learn yourself how to analyze the market. And if coincidentally your analysis falls in line with somebody else, cool, that's awesome, right? But other than that, guys and girls, trust yourselves. Nobody will manage your money better than you will. Learn the skills, right? Listen to the experts, but at the end of the day, listen to yourselves. Unless you're married. Even then, Ted, you know what? Call me a contrarian, hate my opinion, I don't care, Ted. The reality is that if you know better, you shouldn't listen to your wife. It's like your wife might be your wife, but she might not know engines as well, and she might want to tell you put some coolant in the fuel tank. I mean, she might think it might work. For all she cares, the engine works from magic. Hey, Mike, 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 Mike. Every time I see you, I get excited. You're such an OG, man. You guys may make this community. You're awesome. Thank you very much for showing up and being here all that long. I have no idea how long we've been going. I will probably have to drop off soon. It feels like forever. Probably had somebody die during this live. It's been so long. From natural reasons, right? Just from old age, if you will. Should not listen to my wife. No, look, if your wife is an account manager and a professional expert, senior account manager, analyst, sure, listen to your wife. If that's not the case, then no. If you know better, listen to yourself. Listen to whoever knows better. Would be good if you both knew, by the way. Drixie, thank you so much. I'm flattered. Still, I could be an idiot. Listen to me, but don't trust me blindly. Never trust anybody blindly. William, no, I do not manage accounts, Brad. It is illegal for me to do so. I very much like my freedoms. Thank you. I do not manage anybody's account, other than my very close relatives, and that's it. And yeah, the stock. Date the stock for a while before you load up. Good. Yes, Michael. Yes. Michael Rosenberg. Very good. Correct. Date it. In fact, don't forget you're not married to it at the end of the day. And this is just the way we speak about these things. And you're in it for the money. You're not married to the stock. You're not a Ron Baron. I'm sorry to say. Okay, you're in it for the money. If you become as rich as Ron Baron, my God, invest in everything you want. Load up in the buckets. Okay. Still live. Yes, Singer, I'm still live. I mean, the people are asking questions. I still am not starving. Not drooling yet. I'm starving, but not drooling. But I'll be going on soon to eat. Dayton Snakorma, still alive. She's old. Things it's like gambling thing. No, it's not gambling. It's okay. I manage my parents. Well, I wouldn't even call it portfolio. They just... but in essence, I do manage some of my parents' portfolios. They don't try to give me ideas of what I should do, and they know I'm the expert. So in fact, if I try to tell them what's going on, they're like, "Please don't." Yeah. Seal on Discord. Yeah, Casey, see on Discord, brother. I'll short that triple Q now since Greg said so. I'm not shorting. Well, you're shorting Qs. Don't short. Drexy, don't short Qs. Don't short. That's not what I'm doing. I'm buying S triple Q. That's a whole different practice. Shorting the market is you against the market. Buying S triple Q is like joining a military that already stands against the market. It's not the perfect example, but I do not short the market. I don't do options, and I do not short the market. It's a bad idea. Because if I'm wrong, you're going to get hit twice. It's going to be double, again, me wrong. Who cares if I'm wrong? If that's your decision and what you think what is right, you're going to get hurt twice as bad. So, no, I don't recommend shorting unless you're an expert. Even experts in shorting miss a lot. Guys, shorting requires being an expert in it. I do not recommend doing that. It's my own advice. If there is advice I can give you, is don't, avoid shorting as much as you can. Avoid leverage. Avoid these things are bad. Avoid them like the fire, the plague, whatever you want to say. Uh, get good at investing before you get married, so you have a track record. Yeah, of course. No, 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 that's true. Good, get at investing at any time. It doesn't matter. You know what, guys? I started what I would call rather late at my what was like 24, 23 ish. I think there was. If I remember correctly, I'm about to be 38. I would say that's far too late. And in fact, before I started, I had a friend of mine bug me for 2 straight years. Come on, you should give it a try. You have what it takes. And I kept on saying, guys, I mean, to him, I kept on saying, bro, I'm like, I don't know nothing about this industry. I'm basically a moron. I have no chance. This industry is for the Buffetts of the world, and I have nothing to do with it. And I couldn't imagine myself in being an expert in that industry, working in it. It was mind-boggling for me. I couldn't comprehend it. Nowadays, I can't imagine my life without this. Literally, it's not just sort of something I do. I love this. I've been offered to manage not just accounts, but I was offered very nice positions. Okay, I'm not gonna brag. You can ask Tom. I was offered various very cool, high-yielding things, but always staying within the bounds of what I'm allowed to and what I should be doing, and all that sort of stuff. I'm not chasing money like as if it's like it's oxygen. I do need it. I work for it very hard, but I don't chase it as if it's oxygen. Brad, I doubt we're family. I mean, with all due respect, if you are my family, you should know my phone number. Reach out, give me a phone call. We'll talk about it if you are family. Um, and to be frank, actually, those who know, I even avoid managing the portfolios of some of my relatives for various not fun reasons. I had a relative that misbehaved towards me and disappointed me very badly when I've made tremendous profits for that person. So I'm very particular with whom I'm willing to manage the accounts for. First degree family, basically, just for you to know. Thank you for your time. No, my pleasure, guys. I enjoy this. Essie, are you kidding me? I enjoy this. It's great. I can describe. I mean, guys, come and talk to me on the Discord. I'll gladly explain exactly why I enjoyed it. But this is total fun. I'm not. I really don't enjoy the stage as much, but I enjoy the hangout with the people, if that makes sense. And yeah, I'm 18. Are you kidding me? I don't even want to tell you what I was thinking about at 18. You are early. I mean, I've heard younger people, but 18 is amazing. Uh, uh, Livio or Ivailo, I'm not sure. Mr. Stoyanov or Miss Stoyanov, you are not late. You're amazing. Just keep it up, even when hard times come. Remember phrases by the by the giants of whom shoulders we stand upon. Bye when the blood is in the streets, even if the blood is your own. Quoting Baron Rothschild here. The important part of that quote is even when the blood is your own. So no, 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 not at all. I wish I had half the brain you have to get involved at 18. Right, Mike? 18. We even have younger. We have even younger. Like, we get blown away every other day. That's why we try to keep the community as PG as we can, because we know we sometimes have very young members join in. That's one of the reasons, guys. So just for you to know, we have very young members that also are into learning how the market works. So behave, please. But yeah, 18 is amazing. First of all, it's amazing. I'm more traditional. I'm not a big fan of crypto, at least not its current form, and various reasons. You can talk to me on Discord about that. I'll be more than happy to explain. Definitely not none of the NFT nonsense and all that blah blah crap that was all the tulip mania that was made. None of that YOLO into the market. No, none of that stuff. I'm very traditional. I know I look rather sort of young spirited and all that, and I am in various ways. But when it comes to the market, I'm as traditional as a geezer. Okay, I'm like, look at me like a Buffett, if you will. Okay, like a Munger. R.I.P. Yeah. Greg has a lot of land in the metaverse. What? I have zero land in the metaverse, and I don't need any. Trust me. You can take mine. Feel free. Let me know how it goes. All right, guys and girls. That I've been here forever. I have no idea how long this is. I'm assuming nobody in the world will watch this because it's been that long. At least I hope you guys gain some benefit from all of this. And again, as I said before, don't follow no one blindly, especially not me. In general, just learn, educate yourselves. More so, again, the market can be very times for long period, irrational longer than we can stay solvent. Technicals can be deviated as well. Conditions can change. Look at the market as almost like traffic, right? There's a reason why you stare out of the windshield all the time instead of, it's not 10 minutes at your phone and then 10 seconds at what's happening on the road, right? It's more so 10 minutes on the road and 10 seconds on your phone, which you shouldn't be doing either. And to give another analogy or something analogous to that, imagine if you're about to exit on a highway and you need to take that exit, but for whatever forsaken reason, somebody made you deviate, got in your way, and you couldn't take that exit. That did not change your destination. Remember that. That's it. With that in mind, ladies and gents, that was awesome. Thank you for your time. Like, subscribe, blah, blah, woof, woof. Join our Discord. Don't forget to confirm the rules. And I see ya. Bye bye.